Hello and welcome back to KD's Business Tips. Michael Lapide here in a short video on tax strategies for business owners. Tax planning for your business is a must. It's imperative. It helps reduce your liability, improve your cash flow, and keep you compliant with the government, which causes you less issues. Here are some common tax planning strategies you can use for your small business. Number one, consider incorporating your business if you haven't already. Incorporating your business can help you reduce taxes through what's called the small business deduction. That's up to $500,000 net on active business income, where you pay a very low tax rate compared to individuals. And business income is also generally taxed lower when it's active, taxed lower than individuals. Be strategic in paying yourself. Note that salary is tax deductible. The corporation contributes to CPP and gives you RSP room. However, dividends may also be beneficial because the fact of the matter is you will pay a little less tax and you will pay no CPP and RSP. However, some people need in their planning for that CPP or RSP. Some people have individual pension plans. Some people have other retirement plans. You may consider using a combo of salary and dividends, and that's what we usually do. There's a magic number of wages that we can use to make sure you still get the benefits of being an employee and the tax credit for employment on your personal tax return, but at the same time maybe pay no CPP or low CPP and still pay lowest overall tax. Quite the savings. Also, you can use income splitting if applicable. Remember, pay reasonable salaries to maybe family members. If your kids or spouse are working, or you pay reasonable salaries to them. Are we splitting dividends in the case that they're engaged in the company, or maybe they're an officer, or whatever the case may be? There are rules around that, tax on sprinkled income, TOSI rules, but we got to look at all opportunities to split income. We can also use deduction splitting too, so we can deduct, use the deductions and credits on our personal tax return to split, and we can maximize from the corporate income to make sure that that's utilized. We can also maximize our deductions and credits personally. So we talked about splitting them, but maximizing the use of them. So just an example to make sure. So if you were looking at, you had children and you and your spouse were working in the business and you go, well, we want to take all dividends. The problem with that is, what if you have childcare and you can't write off the childcare on your personal tax because you have all dividends? We may want to clarify a certain amount of active income, wages, for example, or salary that would be enough to write off those childcare expenses. So we always want to look at what your personal situation is and mirror it with corporate. We want to mirror those two and plan together with personal and corporate in the family. We can also consider using a holding company. We can transfer excess holdings into what we call a capital holding corporation and invest it from there, or use it to protect assets or buy other assets and real estate and so forth. We can utilize the capital gains exemption. It's just continuing to expand. And before you know it, you're going to have millions of dollars tax-free of selling your small business shares, farming property and fishing property as well. But using that lifetime capital gains exemption and having a plan to use it is very important. Defer income is another big one. You can defer income or accelerate expenses and therefore defer taxes potentially, right? So that's part of the strategies for taxable income, either lowering taxable income or just straight deferring taxes into the future. And we want to make sure that we strategize, we plan, work with an accountant that's familiar with our small business, and ensure that, that accountant is, of course, experienced in tax planning, and actually work with a professional to create a tax plan. It's amazing how many people do not even have a tax plan, even for the current year, never mind a future tax plan. Always work with a professional and create a current tax plan. Thanks for being a part of KD's Business Tips, and we'll see you in the next video.